Hello, my party people. Let's dive into what we need to pay attention in this week and month in the stock market. We have 1 week left in March. Let's figure out what could happen in the last week and what we need to look forward to in the next couple of months. My name is Childill Trades. I use my 12 years of experience to help you succeed in the markets. So let's get on into it, guys. First, we always start off, how is the market feeling? It's important to understand sentiment. If you haven't invested much in the markets, sentiment often is more important than actualities. And so right now people are really fearful. This often acts as a contrarian indicator, but we've been in the extreme fear since the market peak. And so this specific has been a little less reliable, but it can still tell us a bit of a story. We cover this every week on Friday videos. Today is a Sunday video. But two things that we're looking at specifically. The first one, put call ratio. We have the put calls back to 0.78. We topped out at about 0.93. What this means is how many people are expecting the market to go lower versus how many people are expecting the market to go higher. When we have pullbacks, we typically see this 0.8 range or higher. And I've said in many cases, like what we could potentially see here is a pullback down maybe to this, 0.7, 0.6 range, and then maybe one more boost higher. But it does seem like a lot of opinions are starting to change online. There seems to seem a little bit more bullish sentiment that the tariffs are actually not going to be as impactful as we originally thought from Trump, or that he is already working out deals, this reciprocal tariffs, or April 2nd when he releases like what this new tariff structure is for the US. I think a lot of the fear is starting to get baked in. And so we're going to have to kind of see the outcome. The second thing I like to look at, market volatility, VIX. Whenever the market pulls back, we see these large spikes in VIX. I said watch for this to come back to the 50-day. And now we're going to have to make it see what decision it makes over the next week. Do we see this VIX continue to go down and volatility go lower? Or do we see this actually bounce off the 50-day and hit one more peak higher? I don't know if we'll get above 27, but do we see another peak up into this, 20, 23 range? And if we do, that might be the final small pullback. We'll get to on the charts where that could be before we start the next rally up. I do believe that we still have one more last phase of the bull market before we have a more traditional bear market that could last a little while longer. But this is what we want to look to in the short term. Last thing let's look at is, did I already go past it? Market breadth. So market breadth double bottomed, right? Like we see a bottom back in December. We saw a bunch of stocks. Market breadth is essentially when more stocks are above their SMA levels. And so we saw that starting to broaden. We saw other stocks outside FANG and the big tech and those momentum names start to perform better. And then we had those crash. And so we are seeing a slight recovery here, which could be a positive sign. It's showing us that, okay, after that pullback, everything having a correction, maybe the breadth starts to increase. And breadth increasing is a large positive for the business because that means more stocks are moving in a positive direction, which typically means that there's an overall market positive inflows of potential capital. But the main thing I want to hop in today before we get into the charts is understanding GDP a bit and what that could mean about where the US is headed. Before that, Patreon, if you do not follow the Patreon, I have a free tier. Just follow it, and I am uploading a monthly watch list of stocks. So if you join for free, you get that. If you do become a paid member, which is just supporting the channel, helping make these videos, I put out basically shorts every single day updating you on the market, as well as 2 weekly videos, more long form deep dives on what's happening. 5 months helps just make this channel better. And I am also adding in my monthly specific watch list. What stocks am I keeping an eye on specifically? Going into a few things. So I covered in my long video that I made last week. Go watch that if you haven't yet. It's kind of like what's happening with the Fed. Why is the Fed making the decisions they're making? How does that impact the US and potential long-term growth? So go watch that if you haven't. Super detailed and helpful for you to understand the macro picture. But something I really want to go on right now is growth versus inflation. And why these two factors are really important to understand is because when you have slowing growth and you have inflation either stagnating or increasing, you start to get to a potential environment of stagflation, which is really, really negative on the economy. Because even though we're not seeing job layoffs right now, and I covered that in the long form video, we are seeing hiring freezing. We're not seeing people let go of, which is a positive. But if we start to see growth stagflate, growth is slowing, and inflation stays flat, then that could create a recipe of disaster. And as we're coming closer to Q1 earnings, it's something you need to pay attention to. Basically, every company in the stock market, all the big names said, we are expecting a soft Q1. And so if we see soft Q1 and then we start to see soft 2025 guidance, that will put more down pressure on the market. Especially with the Fed not cutting, it could lead to a more severe short-term bear market, kind of 1 year-ish type bear market. So that's something we want to keep an eye on. Really specifically, US going down to 1.7 in GDP growth. Why that's so important is because ever since COVID, the US has had really great growth. Obviously, we had inflation really high, but, coming out of COVID, 4-5% GDP growth, which is insane for the U.S. We're a 2 to 3 average typically, historically. You see 2s and 3s here, and then you start to see some low 3s. We had 1.6, but everything was in that high 2s to 3s, which is above the historical average for the U.S. And so now we're seeing that U.S. is going to see 1.7 in Q1. And so what I said, if we look at this chart wrong one, is Q1s can often be soft, right? Q1, where's the other Q1? Q1, that was like the softer quarter. Q1, softest quarter. Q1s can be soft because you're coming out of the big shopping consumer season. But we need to see what companies are telling us. And so when you look at what the Fed is saying about not cutting interest rates, you see the administration about cutting government jobs, as well as having tariffs. These things could continue to impact growth, and having inflation kind of putter, right? And that gets to inflation. So I would not go off what the government says. This site is actually, I think, really accurate. It's called trueflation.com. Check it out. And we've been around this 2 to 2.5%, 3% for the last couple of years. But we have seen this big decline down to the high to mid ones, to close to 2s as of more recent. Like if we go in the last month, we have started to see this come back up a bit, right? 1.6. 1.7, people knowing that tariffs were coming and some prices increasing and people trying to get ahead of it. And so we do see it getting back to 2. So we see growth at 1.7 and we see bad guidance from companies and we see inflation staying around the 2. That is mean that every dollar that you put out, that you have sitting in your bank account is potentially worthless, like you're not making any money on it or you're slightly losing money. That's kind of what we define as stagflation as, is when your growth is lower than inflation. And so it's something we want to keep an eye on. I don't believe we're heading to stagflation, but seeing inflation and growth rate flat to each other is not what you want to see in the economy. Kind of going in to understand GDP a little bit more. So if you don't know what GDP is, it's consumer spending, investment, government spending, net exports. And so I want to highlight government spending because we've had the government spend so much money since COVID. It really has artificially inflated GDP. These GDP numbers, maybe right after COVID, there's a lot of buying because of all the money in the economy and people purchasing. But a lot of these numbers are inflated. When you think of government jobs, how much the government has grown over the last couple of years, and now the new administration cutting all that government jobs, that is going to have a negative impact on GDP. And so I think there is a chance that we actually see GDP at or below the 1.7 estimate. I think there's a possibility that we even hit this or lower unless there are some other changes, which I cover in my long form video. The last thing I want to highlight, and this is going to the charts that we're about to talk to, I think you need to understand economic cycles, both at a macro and a short-term frame. So there are macro boom and bust cycles, right? Like peaks, you have these long bear bear market. I can't speak today. Bear cycles, bear markets. But you also have these at the micro level, right? Like as of recent, we've seen, and this is where I get to the different industries, you've seen tech sell off, but you've seen consumer, you've seen things like healthcare, finances start to do good. Those are late bear market, right? Like we're starting to see healthcare perform. We're seeing utilities, we're seeing finances. These are things we're starting to see perform. So you have both at a small term level, like if you're in a long-term bear market, you can still have these waves within it. And so why this is important is because we are starting to see some of these tech names, which is that when you're at the bottom of the market, start to perform a little bit. You're seeing the finance start to perform. You're seeing cyclicals and technology start to perform. This could mean that correction that we had, that 10 to 13% correction, we are heading out of that short-term cycle. We're still in an overall bear market potential, and we could see the tech start to rise again. So that's something we want to pay attention to. Before we get to the SPY and specific stock names, I want to look at home builders. So home builders is something that's really important. Construction, building homes. This is a really large percentage of jobs and growth in the US. And we are seeing some not great patterns right now. So if we look at this, what do we kind of see? Head and shoulders potentially, as well as we are at really important support. And so you see these candles more recently, broke below, came above, broke below, came above, broke below, and it's kind of moving above. So we're going to want to really pay attention to home builders. If we see home builders fail, this is on the daily chart, fail off the 20, right? Like we keep hitting it and going lower. If we see this guy come up and come lower, the markets will also move lower. I'm actually going to overlay the SPX, and look what we see, guys. We see a perfect correlation between home builders and the SPY. Home builders go down, SPY goes down. Home builders go up, SPY goes up. And so home builders down. I am not all the way convinced that this wave is down yet. We could have an A, B, C, but we want to see if this level holds. If this level doesn't hold, let me move my face. If this move does not hold, let me get rid of the SPY for a second. Around this $97, this is the XHB, then there is a high chance we're going to 92. And if we go to 92, I would say this is a really big supply here, and it's going to be really hard to break below. But if we were to break below this 92 zone, we're coming down to 84, and we're probably going to head into a short-term bear market. So home builders, if you're investing in the market right now, if you're paying attention, if you're a swing trader, if you're a long-term buyer, you want to pay attention to home builders right now, because this is going to tell us a lot about where the market could be heading. I'm going to go to SPX first because we have some charts here that we like to pay attention to. We keep talking about how the 20-day is really important. 20-day is a momentum indicator. So when you're above, you're going higher. And when you're below, you're going lower. And so we're coming close to the 20-day. This is on the daily chart for the SPX. Like I said, there's an opportunity that we have an ABC wave. Don't know where that ABC could be going, right? Like we said, maybe the fourth ends around 5,400, which we still have a keen eye on. Or if we head into maybe a longer term correction, we could be going down to like 51, 5,200, which would be not great. But we'll have to see what happens here. I would say overall, it seems like the market's putting in a decent base. On Friday, we had, look at this really big green candle right here. Doesn't mean that green candles means a reversal necessarily. Like here we saw a green candle, and what happened on the green candle, one more green day and then a sell-off. So it doesn't mean that we found a bottom, but this is a positive sign that we're seeing some increased volume at the end of the week. We also had option exploration, so there could have been some short covering. There could have been some other things happening at the end of the week. So it does not mean that the market is going higher, but it's something we want to pay attention to. Let's get a little bit more into the details of things on the SPY. Like we said, we kind of had this range up here as a target, but we still have, I'm going to call this just one wave down, like I said. And where does this potential second wave up go? So we're going to look into some specific names to figure out how much strength is in the market. But we're no longer on RSI in the oversold territory. And typically we see the market come to this like 40-50 range. That often can be a reversal back to the downside. So when you look at the long term on this, right, like here you had the pullback. You had a low and then you had a higher low. And you pull back to the 40 range. you had it come up, you had it come back down, you're at the 40 range, right? Like look at this correlation, pull back to the 40. So the 40 can sometimes mark a reversal in the bull, but when we get below the 40, so we went all the way down to 30, when we get back to the 40, if we can't break above and show some positive correction on the RSI, that could mean we still have another wave lower. And so what I'm looking for is, does RSI break above and then test that 40? And then that would mark, okay, we're back into a bullish cycle and phase of the market. But if we come here, maybe come a little bit higher and then break back below the 40, I'm looking for either a lower high. So like, I'll give you some examples, something like this, right? Like it's higher, but RSI is a little bit higher, or this gets lower and the RSI is higher. So some divergence happening on the daily chart. So those are some things we want to pay attention to. We are getting really close to the 20. So the 20, again, we have this little range here, which I'll just call 573 to 580-ish is kind of the range that we've been looking at for a potential bounce. If we look at the 50-day, we still have a lot of potential to bounce 50. We do have the 50 starting to decline. Typically the 50 decline, if you just start seeing the decline, it sometimes means that you have a little bit more downside coming. But nothing, I would say, is really broken here yet, which is a huge positive. I think the 200 was on the daily. Yeah, 200 and the 20 are at the same level. So does the market come up, hit the 20 and the 200 and get failed? Or can this go up, maybe come back below to where it couldn't break out above on those tails of those candles, those wicks, come above the 20 and the 50, maybe or 20 and the 200, touch the 50, come back to those and then higher? That would be extremely positive. But if we hit these, get rejected, we could see one more low again. 540 is where we're targeting for a potential last pullback. So there's some things we want to pay attention to. Let's get to some specific stocks now. We're going to cover a lot of momentum names because these are the stocks that are going to push the market. The first one is Tesla. Don't have a lot of charts on here for a reason, but we do see the 200-day flattening out. We do see some consolidation down here, which is positive. If it can break above this 250, we could potentially see some more positive momentum to the upside, which will bring the overall market up. We went to the SPY and said, okay, we might have a little bit more space to go up. We have, actually, let me mark these so we have them. The 20 days at 260. So that's something, again, momentum indicators. When we're below the 20, what did I say? Bearish. When we're above the 20, it's bullish. So those are things we're going to pay attention to this next week. But I do, if there is some positive momentum, we got really oversold on Tesla. We're seeing some movement higher. We saw some divergence happen on the RSI. Let's see if this thing can get up to 50 on the RSI. 50 to 40. So I'll just call it 60 to 40 is this range that you typically see stocks stay between on bounce levels. So like when you go historically, see my green marks, you typically see pivot points between 40 and 60. And these can tell you when things are bearish or bullish momentum. So right now, if we come up, come back lower, that's a bullish momentum on RSI. If we come up, break back below, that's a bearish, and we could see a lower. So it does look like Tesla has an opportunity to run a little bit here, which would have a really positive momentum on the indices, which will make everything else go higher. So those are some levels we want to pay attention to on Tesla. Let's go to Amazon. That's not the ticker for that. Again, if you don't support the channel, please do. So Amazon 200 is a really important level here. We have both the 20-day, I think it's the 200-day at 200 now. So it's now below all the indices, which honestly is a very bearish sign. But like I said, if we start to see things like, see, we're right at the trend line as well. I mean, this is how it works, guys. This is how the maths for the markets. We came down to a really important support zone. This is just how the markets function. I personally believe, if I'm giving you my perspective on the market, I believe we will see small caps start to outperform as we introduce tariffs and how those impact profit margins with less importing happening and more domestic production. I think small caps are going to start performing better. That's just my personal opinion. And I think things like the AMZN will start to underperform or go sideways. That's just my personal opinion. But let's look at some important trends, some important lines here in case we do see a little bit of momentum switch on the market for the short term. 50-day, it's declining. Maybe it will come over to this 209, 210 range. And we could see some bullishness out through here, right? Like if we get above the 20 and the 200-day, then this thing could push up to the 50, and then we'll see what happens. RSI, it's not oversold anymore, but it is at 36, which is on the low end. So this does have some opportunity to get some positive momentum in the short term. So again, when we look at the SPY, now that we've looked at two big tech stocks, big tech AMZN, which impact those indices, you know, we're right here. We could see some positive momentum back up to the 570s, 574. If we see some big rips on Google, Amazon next week, the SPY will probably move its way up to 575, which again, like I said, that is where we start getting close to around the 20-day. So the 20-day is going to be really important to see if we see momentum shift or not. NVDA, what to pay attention to this week. So we are in a pretty perpetual down wave here. Let's put some channels on this chart. Right, we're in a down channel, but we do see big swings. Typically down channels, you'll see touch a low, then you'll see the touch the high. So again, this one over RSI is not as in bad of a position. It's kind of in the middle, and NVIDIA is a stock that's going to impact the entire semiconductor space. So if NVIDIA sells off, everything else might as well in the short term at least. We're challenging the 20-day, so that's a positive. We're right in the middle of this downwards channel currently. But what we've seen so far, hit the bottom, hit the top, hit the bottom. So this thing could start moving up over the next couple of weeks to the top of the channel, and then we're going to have to see what happens. Does this thing start to putter out, you know, and go sideways for a bit and consolidate, or do we see this hit up and then come another wave lower? I personally think that this stock has been overbought for a while. This is a lot of more like feeling versus science, or really looking at the fundamentals of valuation of the company. But I could see this thing coming down to $100. That was my initial price target of buying. It didn't get that low, so I didn't buy. But this 100, I'll just call it to 90 range, is really where I was looking at. And so if we see a bit of a rally here, we could see one move lower, just call it something like that. Really what the market looks like is, you know, something like this. But we could see something move lower over the next couple months. So that's just something that's worth looking at for NVIDIA. Again, like the other stocks, this has some room to run, which will push up the rest of the market. Let's look at some smaller caps, because the big tech stocks are going to impact how these smaller names move. Right now, when the market's really scared and you're in kind of a correction cycle, everything moves together because everything's really scared. And I would say momentum names. So if Google's moving, if Amazon's moving, all these small names are going to move. We are still below the 20-day. This is something I've mentioned for the last couple of weeks, but we've seen some good consolidation when we look at the daily, right? Like you see a lot of sideways candles here. That typically means there's a lot of buying happening, right? Like you see the big red candles that sold us off below, and you see this kind of sideways action, a mix of green and red. And this is where you start seeing consolidation. Guess where the consolidation happened, guys? It happened where the last range of consolidation was, this 30 to 35. So let's really see what happens. Again, like I mentioned before, if we see Amazon, Google, Tesla, all these stocks start to move higher, these stocks will move higher as well. So yeah, kind of the 20 and 50-day are pretty close together. So if we see the market start to move higher, I do see this coming back to around that 38 to 40 range. And let's see if we can get back above it. If we don't get back above it, then there's probably either another test of the low again for a double bottom, or we go a bit lower. And I've mentioned before, I missed out buying this stock around 20, 25 bucks. And so I'm waiting for that. If I miss it, it's okay. There's a lot of other opportunities I'm holding. But I'm just not quite convinced on these stocks, especially like I said, if we get a Q1 that's really negative in terms of growth, these stocks are going to be impacted, because if everyone's seeing lower growth, if GDP is lower, these companies are not going to grow to what they told us they would at the beginning of the year. So that's something to paying attention to too. So those are some levels for HIMS. PLTR, the market's favorite child. So a little healthier on this chart, actually. Like the first thing I want to grow is inverse head of shoulders, potentially. So we could see a little rally off here. Let's see where the 20-day is. Aha, we're above the 20-day. We're above the 50-day. These are potentially bullish signs. Inverse head and shoulders if it can continue. So those are some things we're going to pay attention to. It broke below the trend line. Now it's getting back above it. There's some positivity flowing here. Let's just get rid of this line because this is irrelevant now. So there's some positive, but we are at a very, very important resistance line. Right here, you saw the resistance. So right here. And if it breaks above, we're probably shooting to 98 bucks. So you have a 10% upside if we break above. I would say that's a really high probability just because of how long these wicks are. Something to pay attention to is typically when you have long wicks, that means there's not a lot of resistance or support either on the upside or downside. And so if you can have enough bullish momentum, big green candles come in, they'll often just shoot right through those areas to the next supply zone. So that's something we're going to want to pay attention to. 100-day, I think, yep, came back down towards it. And now we're challenging the 20 and the 50. So this is a really important zone for PLTR. Again, like I said, the indices could push this thing back to 90, 100 bucks. And then we have decision time. Does this thing get back to 90, 100? And then does it sell off, right? Like we said, we're not out of it yet. We have the tariff news coming. We have some negative on growth. We have the Fed slowing down on QT, but also not lowering rates. So there's some pros and cons. There's a lot of uncertainty. So let's see if this thing can get up. If it can get above, test below, then we're going to go higher. If it comes up and hits this, comes back lower, maybe now breaks the trend line again, we could get to that secondary trend line. I honestly, in this market, would love for all these stocks to come down to the 100 or 200 day and test them. If we go to, I'm actually going to do some freestyle here on semiconductors. This is something that I was really looking for on the semiconductors. I can't remember if it was the daily or weekly chart. It was the weekly chart. I was really wanting this guy to come down and test the 100-day. That was really bullish for me. If I could see really negative, come down to the trend line, come down to the bottom of the zone, I thought we were going to then start an uptrend. But we saw a reversal a little bit higher than I was expecting. And so we're going to have to see what happens here on semis. But it was some positive momentum. But speaking of semis, let's go to AMD. Let's just hit them all. We're at 30 minutes. Some positives here. The first positive, we broke above this trend line finally. That's been going forever and ever since October of 2024. That's really bullish. Trend lines are important. They help show some potential short-term momentum. I think we're challenging a couple of the SMAs if I don't forget. So we're above the 20-day. Guys, this stock has not been above the 20-day in a long time, but it does go periods above and it has broke back below. And so we're going to have to see, does this thing break above, come back and test it, and then break up higher? Or does it break above and curl back below? But it's really positive. It's funny. I drew this triangle a long time ago, and look where it came. It literally went to the bottom of the triangle. It's like I know something that's going on in the market. We're back at 50. We've been below 50 for a long time. And so if we see this guy come above 50, test it, and then start to stay in this range, then I would say AMD has bottomed. And we could see a reversal over the long term for this stock. So something to pay attention to. Does it stay above 50 on the RSI? Does it stay above the 20 on the daily chart? Let's look at where the 50 is at. I believe we're close to the 50. Yeah. So now let's see if we can break above the 50. Can we get above that 110? Can we test the 50 and get back in this range? If so, we're now above the 50 and the 20, which is extremely bullish for AMD. This has been in a perpetual downturn. There's been some good news about partnerships coming out recently. But this is, if we can get above the 50 and the 20, that is really bullish. And then obviously you have the 100-day next. But this thing breaks above, stays in this zone for a little bit, and then hits above the 100-day. I'm a happy camper. So we might be seeing a floor come in on AMD, which is really, really bullish. Let's skip one and go straight to hood stock. It's another one that the market loves. So above the 100-day, bounced off. Let's see where the 20 days at. Okay, we're challenging the 20-day, guys. This is really important to know if we're in a bear market or not. If we start to see this bounce off the 20-day more and more, then these stocks are going lower. So this is an important zone. We are at really, really important resistance. This green line is extremely important for resistance. And so we're gonna have to see if it can actually break above or not. For the 50-day, it's a little bit higher, right? Like, we're seeing some similarities. We're seeing these stocks challenge the 20-day. We're seeing some of them challenge the 50, or some of them being, $5 to $10 off of the 50. Very similar to PLTR. Does this thing come up to this important resistance zone and get rejected? Or do we see something like this? And that would be extremely bullish. So, long video. I hope you got something great from that. This is a very important stock market to look at. We might have some short-term positive momentum, but we're not out of the woods quite yet. We need some technical aspects of the chart to show health again. But if we do start to see that health recover, if we do see us moving back above the SMAs, if we see RSI get back above 50 and hold in that range, then this is extremely positive that the correction's over and we can resume the bull market. Till next time, guys, succeed in the markets. Let's do it together. Cheers.